Stock market for beginners in 2021. Stocks. Hello guys, welcome back to Stacking Stocks and thanks for joining us today. We have exciting and fantastic content lined up for you as usual. We endeavor to bring you amazing and educational financial content. Guess what we have for you today? We're going to discuss the stock market for beginners in 2021. You've probably thought about it already, especially if you're a first-time investor. Anyway, before we begin today's discussion, let's have a quick recap of our previous session. Well, what did we discuss? If you were here last time, you remember we extensively discussed high-growth dividend stocks to buy in 2021. What should you look for when buying dividend stocks? Don't worry if you missed our previous session. The video is still available, as always, on our channel. What do we have for you today? Are you a first-time investor? Well, today we are providing you with a beginner's guide on how to invest in stocks. Are you ready to start investing in the stock market but aren't sure of the first step to take? We've got you. In today's session, we'll guide you through the stock market for beginners in 2021. How do you start investing in stocks? Well, if done really well, stock market investing is one of the most effective ways of building long-term wealth. A $10,000 investment in the S&P 500 index 50 years ago is worth about $1.2 million in the current market. Does that surprise you? Well, we're here to teach you how to invest in stocks effectively. There's a lot you should know before diving into stock investing. We'll give you a step-by-step guide on how to invest money in the stock market to ensure you do it the right way. First of all, here's a brief guide of how to start investing in stocks. Decide the investment approach you want to pursue. Next, decide how much you're willing to invest in stocks. Thirdly, open an investment account. And then lastly, diversify your stocks. Now that's just a brief outline of what we're discussing today, so let's go ahead and have an extensive discussion on how to start investing money. First, you need to decide the investment approach you want to pursue. How do you start investing in stocks? Are you an investor who prefers to buy individual stocks, or would you rather take a less active approach? There are different sets of people as far as investing in stocks is concerned. We're going to give you a list of questions to find out which one best describes you. Are you an analytical person who enjoys crunching numbers and doing research? Do you hate math and don't want to do your homework? Do you have enough hours in a week to dedicate to stock market investing? Do you like to read about different companies you can invest in, but you lack the desire to engage in anything math-related? Are you a busy professional who lacks time to learn how to analyze stocks? Are you scared that being associated with any of these statements rules you out as a great stock market investor? Well, sit back and relax. We've got some good news for you. The essential differential in stock market investment is how you do it. We've prepared a brief guideline on the different ways to invest in the stock market. Here's a list of the approaches you can pursue. Individual stocks. Do you have the time and the desire to research and evaluate stocks thoroughly on an ongoing basis? If you don't, then you shouldn't invest in individual stocks. So what are we saying? If you are a smart and patient investor, you stand a chance of beating the market over time. On the other hand, if you feel like you lack the time and desire, or moderate mathematical calculation and quarterly earning reports are not appealing to you, take a more passive approach. We endeavor to ensure that you use the best approach that suits your needs and serves your interests. Index funds. What are the pros of investing in index funds? Are they that significant? We have some answers for you. In addition to buying individual stocks, you can also invest in index funds. The latter has significantly lower costs and is virtually guaranteed to match the long-term performance of their underlying indexes. Historically, S&P 500 produces about 10% total returns annually. Such a performance can help you build substantial wealth over the years. Robo-advisors. What are robo-advisors? If you're a first-time investor, you're probably wondering what we're talking about. Fortunately for you, it's not rocket science. A robo-advisor is a brokerage that essentially invests your money on your behalf in a portfolio of appropriate index funds for your age, risk tolerance, and investing goals. In simpler terms, a robo-advisor acts like your agent in the stock market. A robo-advisor not only selects your investments, but also optimizes your tax efficiency and makes automatic changes over time. What else do you need to do once you've figured out the approach you want to pursue? Well, you need to decide how much you're willing to invest in stocks. First of all, you should not invest any money that you'll need to access in a minimum of 5 years. Yes, the stock market is set to rise in the long run, but there's too much uncertainty in stock prices in the short term. There are times when the stock market will drop by 20%. That shouldn't be a cause of alarm, because within a couple of months, the market could even rebound to an all-time high. What then should be your investable money? That should be the money that you won't need within the next 5 years. Open an investment account. Do you have a way of actually buying stocks? If you're a beginner, you should open a brokerage account. You're probably wondering where to get such accounts. Well, companies like Charles Schwab, E-Trade, and TD Ameritrade offer brokerage accounts. How do you open a brokerage account? It's not as difficult a process as you might think. It's a quick and painless process that only takes a few minutes. You can easily fund your brokerage account via EFT transfer, mailing a check, or wiring money. As much as the process is easy, there are a couple of things that you should consider while selecting your choice of broker. So what are some of these things? First, the type of account. Determine the type of brokerage account that will suit your needs. Are you a first-time stock investor? It would be best to consider getting a standard brokerage account for an IRA or individual retirement account. Then you also need to compare costs and features. The majority of online stockbrokers have eliminated trade commissions and are on the same level as far as costs are concerned. However, there are several huge differences. For instance, access to investment research, educational tools, functionality, and user-friendliness vary from one to another. If the broker offers you a demo version, we recommend that you should try it. Diversify your stocks. Now that you've already learned how to buy stocks, which stocks you should buy, how many stocks you should buy, the key concept of diversification is having a variety of different companies in your portfolio. Ensure that you stick to businesses that you understand. You shouldn't rush into buying high-growth stocks just because they have great potential. Buying flashy, high-growth stocks may seem like a great way to build wealth, but can also pose a financial risk. We'd advise you to familiarize yourself with the basic evaluation techniques before investing in a particular stock. For instance, our guide on how to start investing is a good place to start. Now, we're here to help you add exciting and long-term growth prospects to your portfolio. We hope that what we've covered is sufficient information for you to embark on a successful stock investment journey. That's all we have for you today. Once again, many thanks for tuning in to Stacking Stocks today. Remember to like, subscribe, and share us with your friends. Until next time.